computer. Okay, great. Okay, let's get started. We've got a good crew here, and we'll keep going. See if probably can't see that just yet. We're going to see if you can see my agenda. Can you see the agenda?
No.
Okay. I think what I've learned sometimes is you have to be smarter than the computer, and so I lose immediately. Wonder if I can get anyone else to manage the waiting room here. Yeah, we'll worry about that in a minute.
I
Okay.
could do it a little bit later. I'm on my phone now. This is Rick. I
Okay.
can, but once I get on my laptop, I can do that.
Okay, sounds good. Thank you, Rick. So
Here
let's
comes
see.
your screen.
Okay, we see the agenda now.
It just says Floyd. Yeah, there we go. Now we see the agenda.
Okay, cool. So welcome. And some of you may be first timers. We're going to do a poll here in just a little bit. And we've been doing this 15 years here, and we have a little disclaimer. I'd like to scroll down. Just take a quick look at that. I think everyone knows that when you're involved with IBD Live and IBD meetups and other venues, that we're all volunteers here, at least on the IBD meetup side, maybe not on the IBD Live side, but we're doing this for educational purposes only. I'm not licensed to manage money or recommend anything. So we're not in any way intending this to be regarded as buy, hold, or sell recommendations. And I think everyone knows investments have risk. And we may show you some performance numbers tonight that are looking backwards. Past performance is no indication of future performance. And I think everyone on this meetup tonight, I think that it's possible to lose money in the market, right? We've all done that for sure. So everyone should accept responsibility for their own investment decisions and don't blame IBD and the meetup organization, and especially don't blame this crazy guy named Floyd here, okay? So let's just all understand what we're doing. So tonight, let me change the view here a little bit. We're going to do a couple of polls. In fact, we've got 3 polls to do, and we're going to look at IBD's big picture, and we're going to look at how some of the select leverage ETFs have performed so far on a monthly basis. And we're going to dive down a little deeper than we did last month on leverage exchange traded fund trading rules. And I've got it in a format here that I hope would make it real simple for everyone. And then Gary Taylor's got a exciting announcement for us. That'll be coming up shortly. And then I've got a summary of the dollar cost averaging strategy that we introduced almost 3 years ago. And Eric Reese, one of our members, developed even an improvement to that we're calling the dollar cost average strategy version 2. So I'll show that if you're have been following the strategy, how that performance is. And then we've asked Eric our guest speaker, to give a summary of the ultimate all-weather portfolio that he introduced to us about a year ago. And last item here, if anyone's interested in replacing me as a meetup leader, we'll do a slow transition and make it easy. But if someone is interested in that, please send me an email at tqqqinvestor@gmail.com and we'll talk about that. So let's do a couple of polls here. I think we have 3 to do. So first one we're going to launch is, where are you tonight? You don't mind just letting us know what part of the country, or if you're not in the country, let us know that too. Good. We got a lot of people clicking in. We're about 65% participation, 80% participation. I'll give it about 5 more seconds here, and then we'll end the poll and share the results. And it's great to see we have one person from Canada with us tonight. I don't think we've had someone from Canada in a while, so that's great. So I'm going to end the poll and I'm going to share the results. And as the leader, I don't fill out the poll. So it looks like counting me, we have 2 people from Alaska, 4%, 39% Pacific, 4% Mountain, 11% Central, and looks like a tie between the East Coast and the West Coast, 39% each. And like I say, 1 person from Canada. So thank you. Can everyone see the poll results?
Yeah.
Okay. Yeah. Yes. Okay. Now let's go to the next poll. Let's see. Okay. The next poll, market exposure. Yeah, most of you probably know IBD's got us in a recommendation of 80 to 100%. Okay, cool. We're all the way up to 80, we're up to 90% participation. So we'll give it about 30 more seconds. Okay, we'll share the results. You can see the results here. 2 people are 40% or less. 5 people, 4 to 60, 10, 60 to 90, 8, 90 to 100. And then, wow, 11% of the people more than 100. So they're saying, go, baby, go on this one. Cool. Thank you. I really appreciate the participation. We had 93% participation on that one. That's excellent. Thank you. And then I have a little bit of an unusual poll here. Are you following the exchange, leveraged exchange traded stochastic strategy? And the questions are related to, are you using TradingView for daily or weekly, Thinkorswim daily or weekly, or a totally different platform? I guess I could have had one that said, I'm not following the strategy, but we'll see. Oh, okay, cool. So far, we've got 13 people that have answered. We'll give it maybe 30 more seconds, and then we can just continue on. But this gives good information to me, Rick, and Gary. Okay, I think I'm going to end the poll. We've got 54%, and I'm going to end, and I'll share the results. So we have 3 that are doing TradingView with the daily, 5 TradingView weekly, 1 Thinkorswim daily, 3 Thinkorswim weekly, and 6 people are using a different platform. So that's good to know. Gary, does that help and give you some information you were looking for?
Sorry, can you hear me, Floyd?
Yeah.
Okay. Yes. Thank you.
Okay, good. Okay, we're going to end all of that now. And let's go back and see. I think what we want to do now is look at the big picture. I think what I have to do is go back and share my screen again. Let's still go like this. So this just came out just a little while ago, maybe an hour ago or so, on the big picture for today. And I think all of you, I've said this many times, I recommend that you read this every single day. It doesn't take that long at all, and it's just jam-packed full of useful data for IBD style investors here. I read it all the time. So I'm just omitting a couple of people here. So the stock market finished modestly lower Thursday as Wall Street reacted to hotter than expected consumer inflation report, along with a surprise spike in weekly unemployment claims. So I'm not going to read the whole thing here, but I'd really recommend that you read the whole thing. And this video was excellent. Like today, it's a 13-minute video. It says 8 of 11 S&P sectors ended lower, with real estate and communication services leading the downside. And I think that's because interest rates went up a little bit today. Oil rallied 3.7%. Those of us that live in Alaska, we like to see that when oil rallies. And ahead of Thursday's stock market open, consumer price index for September showed core inflation ran hotter than expected. So that's not what the Fed wants to see, obviously. They lowered interest rates 0.5% here recently because they thought that inflation was getting under control. So let's look at Dow winners and losers. In the Dow Jones Index, United Health Group and Amazon were the biggest gainers Thursday. Downside, Boeing and Home Depot. Magnificent stocks ended sharply mixed. That's an interesting term, sharply mixed. As a roundhill Magnificent 7 exchange traded fund and edged higher. Notably, NVIDIA is approaching a record high. Tesla's building a cup with handle. And I think tomorrow it says Thursday evening, unveil the robo-taxi. That'd be interesting to see
I think
how
it's
it turns out.
Yeah, I think it's tonight. Yep.
Isha.
And one that I've been watching, but I never have invested in, is ADMA Biologics. It plunged. It traded the lowest one-day drop in the history of the stock because it says the company's auditor unexpectedly resigned. At least they didn't say for family reasons. I don't know what's going on there, but I've been watching it very carefully. It always shows up on the Bill O'Neill screen as a stock worth looking at, and I'm just interested to see what's going on there. My advice, if you don't own a stock and you see it plunge like that, and you don't know for sure why, it's probably not smart to try to dive in. That's called trying to catch a falling knife. And the byline on that is you might get cut and get hurt if you try to catch a falling knife. And then whenever you read the big picture, market pulse is a really good, simple cap. Today, small caps lead market lower. Here's that exposure, 80 to 100%, which basically in the old system, that was a confirmed uptrend. Just a distribution day, that counts a little bit from where it was a couple of weeks ago. Leaders up in volume, leaders down in volume. And then the other thing I wanted to show you is let's share my screen again. And we're going to show you what the month by month performance. Can you see this 224 year to date performance on leveraged exchange traded funds? You see that?
Yeah.
Okay. So you can see this, to me, this is a really great visual because you can see SOXL by far the most volatile of everything on the list. And it looks like maybe FAS is the least volatile. And here FAS is up 60% year to date. So this doesn't really tell you whether you should buy or sell or not. It just shows a relative comparison between a few of the select ETFs. I noticed FNGU up 82%. I think FNGU, I believe, wasn't it up 640% last year, I think. And to see it up another 82% this year is pretty amazing performance. Now, most of FNGU is not an exchange-traded fund. It's an exchange-traded note backed by the Bank of Montreal. And so there's maybe a little additional risk when a bank is backing it rather than an index. But I did call Bank of Montreal and talk to them, and they said the most risky ETNs are the ones that trade in commodities and not those that trade in stock or stock indexes. So I just thought this is an interesting little benchmark here to show us how LTFs have performed. And by the way, if you have questions, you can just submit them, where there's a spot here to submit questions. And if it's something like urgent, you can even unmute yourself and ask a question here. So what we're going to do now is we're going to get into, on our agenda, I'm going to give an update to what was introduced last month on our trading rules. So let me get to that and see can you see a slide that says updated stochastic trading buy sell strategy? You see that?
No, not yet.
Okay, we will try that again. How about now?
Yeah.
And I think this is where someone said I need to hide this screen. Okay, there we go. I'll hide it right there. So all of you, I'm sure for several years now, we've been talking about the leveraged exchange traded fund stochastic trading strategy, and we've continued to improve it. And the version we're using now is drastically different than what we used a year and a half or 2 years ago. It's getting better. It's getting more accurate. We're getting more confident with thousands of back tests. And we've had input from folks in our group to give us suggestions on how to improve. So let's just go through. And if you're going to follow the strategy, what are the fundamental buy and sell rules? And let's see if you follow the strategy, what has been the performance? If you follow the rules and you start with $10,000, this particular summary is for the weekly stochastic strategy, meaning typically your buy and sell decisions are on a Friday, unless you have like a gap down type of thing. But notice after 2 years, and these are account values shown, this isn't profits. So if you start with 10,000 after 2 years, with SOXL, your profits a 24,221. But notice I put in the number of round trip trades. That's what RT stands for. 5 years. Look at the difference. Not a huge difference, but there is a difference between TQQ and SOXL. And in 5 years, 28 round trip trades. And what that means is on TQQ, there was a total of 56 if you count a buy and sell as individual trades. And after 7 years, TQQ did quite a bit better than SOXL, but both of them still did extremely well. Turned 10,000 into 395 or 528 with only 35 to 41 round trip trades. And so this sort of gives you a summary on a fairly short duration. between now and 7 years on how following the strategy, and especially the 7-year one, goes through a lot of market cycles where we're having under the old ABD system where we had confirmed downtrends or the uptrend under pressure and et cetera. So some of you might be asking, why would I ever want to trade leveraged ETFs? This slide is to show that. And what our strategy does is many times it will have you sitting in cash. So you avoid when we're in a serious downtrend, there's no reason to hang on to a leveraged ETF because they'll drop in these two particular cases, they drop 3 times as fast as the index. So what are the rules? So I'm going to start off with weekly. What are the rules? We only have 2 buy rules. And notice on the top line, EOW stands for end of week. If you use the weekly strategy, typically you're trading on a Friday, end of the week. So what is the first rule? If the weekly stochastic fast line crosses above the weekly slow line, then the fast line is not below the oversold line on stochastic, you got to buy. So let's look at an example of that. Right here, here's our example. And I'm going to move this little screen out of the way. At least it's in my way. Not sure how I get rid of it. Okay, notice by rule 1. So here is your fast line. Your blue line crosses through the orange line. And the reason you don't buy over here, because that was probably a Wednesday or a Thursday, but this buy occurs on a Friday. Right here, buy on 5/3. So if you go look at calendar, that'll be a Friday. It gives the price. So there's your buy point. And the second buy is that after you sell, let's say you sell because you've hit a profit target that you set. After you sell, you go back and look. If the fast line is above the slow line, you would buy it back again. And here's an example of that rebuy right here. And here it's labeled in TradingView, rebuy, entry buy, right there. So we crossed over here somewhere. I'm not sure if I see it on the page, but then we hit our target profit and then it was time to rebuy. So you only have 2 buy rules. Now let's look at the sell rules. Again, we're looking at stochastic fast and slow line. So the fast line crosses below the slow line and the flow line is below the overbought line end of week after the cross. Or excuse me, after the cross, if the fast line is above the overbought line, you just wait. And you wait for it to drop. Only sell if the fast line drops down to or below the overbought line called the K line, cross under overbought exit. And so let's look at an example. Here's an example of a sell right here. See the cross. Fast line's crossing down below the slow, and it tells us that's a sell. And then here's, let's see, I think I have to go back and look at number 2, sell at the open any day. There's a gap down, prices at or below. Although, wait a minute, I think this other one was when you had, I think this is the one where you wait. The cross occurs, but you're way above your line here. Okay, so you just wait until that drifts down and then you sell, and that'd be on a Friday. So let's go back and look here. We also, I think on our rules now, when we're using TradingView, we set 2 stop limits. One is if the daily price from the previous day close drops below our limit, that's an automatic sell sign. And if you're using a weekly strategy, you don't have to wait till Friday. Let's say it happens on a Tuesday. So we have a 1-day drop, which is sell rules 2A and 2B. And then 3A and 3B are trailing stops. And the way the trailing stop works is you look, since you purchased the ETF, let's say it's TQQ, you go back and look, since you purchased it, what was the highest intraday price since you purchased it? And if you want to wait until your trailing stop, let's say it's 25%, if at the open or during the day, if your trailing stop is hit, that's also a sell. So we can show you examples of that. Let's look at this one. This is a 1-day price drop right here. We had a 1-day price drop percentage. And it says in this example, the price dropped more than 12.9%. So this is the gap down, open down 11%. So this is one of the stops we mentioned. Here's a trailing stop. example. So notice how the peak is right over here. I don't know what that price is, but notice how far this has come down and we hit that trailing stop. And then another rule we have is if you hit the profit target in a trading view, it allows us to set a profit target. We set it whatever percentage we want. It can be 30%, it can be 60%. But if during the day, intraday, at the open, if you hit that profit target, again, you don't have to wait until Friday. As soon as you hit the profit target, you can sell. So what that looks like is this one. So we had a sell right here because we hit the profit target. And then the question remains then, whenever you sell, do you rebuy or not? And so what our sell rule says, let's see, let's go to this one. What our sell rule says is after each sell, go to rule B1B to determine if a rebuy should occur the next day or if you should stay in cash. So on this slide, and I've got a window this on slide number 5, this is a handy one-page summary. I printed this out and I've got it stuck on my wall right here next to my computer, that this one-page summary gives you all of the rules you need for our stochastics weekly strategy. And if we end up refining our strategy in the future, we will revise this page. Now, it's almost identical on the daily strategy. The difference on the daily strategy is you don't wait until Friday. But these are basically the same rules. The fast line crosses above the slow line. Okay, that's not below the oversold line. B1D is the whole rebuy rule. And if we go to the sell rules, these are virtually identical to the weekly rules. And I have a nice one-page summary on slide number 8. So when I send out the meeting recording, I'll also send out a copy of the slides. And so if you want to trade the daily strategy, it might be handy just to print this page. And notice in the bottom, about the bottom 25% of the page, I give an example on the trade daily strategy. The TQQ on the daily strategy, using Market Smith style stochastics daily. The stochastic factors are 20, 14, and 4. I think there are, what are they, 3, 4? Let's see, let me go back and look. They're 5, 4, 3 on the weekly strategy. So you want to make sure you're using the right factors. And on the daily strategy, your trailing stop was 11%, and your one day prior day drop is 5.1%, and your profit target for TQQ is 16%. You might say, where did we get these numbers? Between several of us, we've run thousands of tests, back tests, and through that back testing, we refine what are the numbers that give us the best profit, and that's how we got the numbers. So you can just see all the factors here. We've given you TQQ, and we've given you SOXL settings and how many trades and what the profit is. So I think this is another handy thing that will be a one-page summary for you. And then this is a recap of what Gary presented last month. We found that I've got grayed out here in the middle. We found there was some yearly performance data, had some data errors or something, and we blocked that out. But notice we give you, if you wanted to trade TQQ, we give you daily and weekly variables. So if you wanted to trade TQQ, let's say on a weekly basis, you use Market Smith style stochastics. And so if you have the script available that Gary can get to you, if you don't have it, you have a choice between full or Market Smith stochastics. And so with TQQ, you're going to use Market Smith style or Market Surge style stochastics. And if you're trading SOXL, it's going to be full. So you notice we either have weekly here or we have daily. And the stochastic numbers are 5, 4, 3. And then we have the trailing stop of 35.5, the prior day stop 12.9%, and K-line exit if the fast line crosses beneath. This number here is a 28. We've got the other variables for you here. We show you what the time frame is. This is 11 years. Our profit target is 33.6%. And this weekly strategy for 11 years had a profit of 1.3 million. And notice you only had 67 trades for that same time frame. If you had the daily strategy, you had 266 trades, which is a heck of a lot of trades, but instead of 1.3 million, you have 2.3 million. Gary's done a really good job of putting summaries together for us. This is what the back test results for TQQ, SOXL. All this will be sent out to each of you when we transmit the slides for tonight's session. Then we have Gary's done a lot of back tests on other leveraged exchange traded funds, TECL, FAS, UPRO, SPXL. Let's see, those were for 11 years. These are others for 5.5 years. TECL, daily, weekly, FNGU, daily, weekly, FAS, daily. 5.5 years, UPRO, SPXL, etc. NAIL is over here for daily. And what questions do we have for our little summary we just made tonight? And I might ask Gary to help me if there's a hard question here. Any questions? And I can't see, for some reason, I can't see the questions. Either Rick or Gary, can you monitor the chat and see if there's a question we need to answer?
Yeah, I'm monitoring the chat. There's none there. There's no
I'm
outstanding
watching too.
questions.
Okay. Okay, let me stand Gary. And the next item on our agenda then is that if you have questions, you can always ask later too. Don't worry about that. Gary, you have an announcement to make to us. And so I think do I need to make you a co-leader?
Yes, please.
I got to find your, oh, right there you are. So let's go. You are now a co-host, so you can share a screen and etc.
Terrific. I take it everybody can hear me and see me.
Anybody else?
Yep, sounds good.
All right, great. I want to start off with, I'm not sure how many on the call tonight are actually signed up and using the strategy on TradingView, using the script. But I want to make sure that everybody knows that currently you're authorized until the end of November, until November 30th, for using the script. We have been updating that every few months and have kept it relatively short periods because the script has changed a number of times and we just weren't quite sure how this was going to go. But anyway, things have gone pretty well. Because of that, they've gone so well that I've decided to launch a company, an LLC, and offer the strategy for sale as a subscription through that LLC and a website where we will enable people to get access to the strategy and also, of course, some additional resources that hopefully will make things a little bit easier to implement the strategy and to use it on an ongoing basis. So that's what I really wanted to announce tonight. And I'm going to take and share a screen here for a minute. I think that's the right screen.
Yeah, we can see it.
All right, great, terrific. So the plan, there we go, is, like I said, to sell this as a subscription. And the strategy is being renamed to the LETF Leveraged Edge Strategy. I expect that in most cases that will be shortened to the Edge Strategy. That's a lot easier to say and a lot quicker. But in any case, there will be a dedicated website, leveragededge.com. If you go there today, you won't see anything. I've still got a lot of work to do toward developing the website and the content that's going to go on the website. But I'm hoping to launch this the early part of November. That's my target anyway. And right now, this is a draft plan, all right? There's nothing in stone because I'm still in that development phase. But like I said, I'm planning on offering this on a monthly or annual pricing subscription basis. And that would cover the tool itself, updates for the tool during that period of time. I'm looking at doing monthly support video calls where people would have an opportunity to ask me questions and where we can go over things on the video call to help clarify any questions, issues, etc. There will be a subscriber-only access portion of the website where I'll delve into some deeper video training And my plan is to go in a lot deeper as far as segmenting this out on buying, on selling, on risk management, on ways to maximize profit, etc. And of course, we'll have a specific section for resources like downloading materials for the best settings, the rules, that kind of thing. And let's see. Oh, and I also want to cover some specific areas where TradingView adds to the mix with some tools they have. The strategy tester for understanding what's going on in the back testing and how the performance is doing and validating that we've got the right settings. The bar replay to enable people to actually go through a specific trade and understand on a bar by bar basis how a trade is unfolding and when the signals are coming up to either buy or sell, get in or out of a trade, and then a little bit about paper trading too. So those are my thoughts. That's what I'm thinking of doing. And like I said, it's a draft plan at this point, and it's not in stone. One of the things, though, that I'm still working on, I've got some numbers in mind right now on what to offer the strategy for on a monthly and annual basis. And I'm not going to say what those numbers are tonight, but I'm actually hoping that I can get some feedback from you guys on what you think those numbers should be based on the value that you see this strategy and the resources providing to you as an individual. So what I'm looking at doing is a contest, a little bit of a contest. And I'm going to ask you to send me an email. There's a new email address based on the new website, but I'd like you to send me your best guesses for what you think the final monthly and annual subscription prices will be to enter the contest. I need that by the end of October. And if you just, when you send me the email, the subject line, put contest and try to make sure you get it to me by October 30th, I'd appreciate it. If you would please include guesses for both monthly and annual prices, that would really help. And I need both in order to actually consider you for the contest. And when you do this, think about the value as opposed to what you'd like to or wish you could pay. We all want to pay as little as possible, I think, for anything that we buy or we get. It's just human nature, but everything has a value too. And I'd like you to give some real thought to the value that you would get from the strategy as a tool and the resources with the website, and base your guess on that as opposed to what you may wish those prices would be. And the winner will get a 50% discount off of a 1-year annual subscription. And that would be whether it's an annual basis or a monthly basis for the year. Hopefully that's some good incentive, and I'm hoping we'll get a lot of response to that for this contest. Anyway, that's it as far as the announcement. There is one other thing I wanted to, or a couple other things I wanted to get into and touch on. One is that earlier this month, I got an email from Eric. He mentioned that he was having some trouble with backtesting, and that his backtesting, when he was trying to use the strategy tool with the weekly stochastics, the totals were coming out wrong. And he couldn't get the totals to match. And Eric's been doing this for quite a while. He knows what he's doing. And that was very surprising to hear him say that. So I dived into it and I confirmed that indeed was a problem and that we were getting numbers that were incorrect for the back testing. And so I contacted a few other people, asked them to do the same thing because we wanted to make sure that it wasn't depended on a particular platform or particular settings that anyone was using. And we tried to make sure everybody was using exactly the same settings. And unfortunately, we continued seeing that error. Part of tonight, I wanted to give you an update on the strategy tool And that's the first part of this, is that we are seeing incorrect backtest results with the weekly version of the strategy tool. Now, this is going to impact live triggers. So if you're looking at buy and sell triggers on the chart on a daily basis, meaning on a day-to-day basis, but still using the weekly strategy, you're probably going to see some erroneous information. And the alerts are probably not going to be correct either. So I want you to be aware of that and watch out for it. Now, there's another slide that I'm not going to get into tonight that follows this, but earlier today, I did some screenshots of the weekly strategy for TECL. And in those screenshots, I tried to show different cases where that erroneous information would pop up and try to explain how to look at it. That's in a video that I sent to Floyd, and that Floyd hopefully will post and make available along with the video for the meeting. But the thing to keep in mind here is that the weekly strategy tool, even though it's giving us wrong information on the chart as far as the triggers and such, the stochastics portion of it still works properly. It still works correctly. So if you look at the stochastics and match that up with the rules and match that up with the settings for the particular symbol that you're looking at, you can still use it as a guide to help you make decisions looking at the different leveraged ETFs. So just look at, are we approaching a crossover of the fast line over the slow line within the proper parameters for a buy on a particular symbol, and watch that on the chart, and that should give you an indication that yes, a buy is coming up and it should be implemented at the end of the week on a Friday as normal. The same thing for a sell. So watch the stochastics to get an indication of what's going on. Let's see here. Also wanted to mention that I've still got a little bit of an issue sometimes with alerts. Occasionally I'm seeing alerts that I'll get an alert, but I won't actually see the text on the chart until several hours later, or possibly the next day before I see the text. Now that's a once in a while occasional type thing. It's not that prevalent, but I want you to be aware of it. That does and it can happen. Okay. Also, Floyd mentioned this earlier, but we announced between last meeting and this month, or this meeting, that we had some calculations that were erroneous on the buy and hold numbers and the strategy numbers, the performance numbers on a year by year basis. And I've been working on that. I've come up with numbers now for TQQQ and SOXL, and I'm working on FNGU and some of the others, but they're still looking very good on a year by year basis. So they're going to be probably pretty similar to the numbers that we had before, but I'm using a actual manual calculations to come up with this stuff. I think you'll see some really good data. Also, the buy and hold that we have on the strategy chart, that you see on the chart on the bottom, that the strategy provides, that buy and hold number is generally within about 5 to 10% of what I've been calculating as an actual number. So it's not 100% on the money, but it's pretty close. And we've added a few other things to additional indicators, best settings. One that Chad came up with called slope velocity. It's had some really good results on the daily. And I guess that kind of covers most everything I want to talk about, Floyd.
Okay.
Any questions?
Yeah, any questions? Okay, I don't hear any there, Gary. Okay, thanks. What's your
None in the chat.
stop sharing your screen now, I think.
Okay.
And I'm going to get into the next topic here. And I think my advice would be, don't be discouraged by these little issues right now with TradingView. When I look at the screen on TradingView, and I'm trading, let's say, the weekly strategy on TQQ, I don't need the computer to tell me if there's a buy signal or a sell signal. I can see it with my own eyes. And occasionally I might even buy a day early, typically not more than 2 days early, but I might buy a day early, which really isn't following the strategy religiously. But I realize when I'm doing that, I'm taking on a little bit of additional risk, but I don't mind. As long as I know what I'm doing, I don't mind doing that. So let's get into the next topic. And that is, I wanted to share an update of something we introduced almost 3 years ago. And that is the dollar cost average strategy. And I don't know if everyone remembers that one or not, but it's a pretty interesting strategy, in my opinion. And what the dollar cost average strategy, and we'll go through it in the slides, is if you don't want to get into having to monitor the computer on a regular basis and you have confidence in the U.S. economy, you have confidence that over, say a 5 to 10 year period, that the market, barring some crazy unusual event, the market most likely will be higher 5 or 10 years from now. And how do you take advantage of that if you don't want to get into a lot of buying and selling? And so let's just show you the strategy. If you're using the basic strategy, and we have two strategies, we have a basic and we have one that is an advanced strategy here, but on the basic strategy, you only have one buy rule. And it doesn't have to be $1,000. We're using $1,000 as a placeholder, but the rule is if you want to invest $1,000, you put $1,000 on your favorite leveraged exchange traded fund. Maybe it's TQQ, maybe it's SOXL or others. On the last trading day of every single month, you put $1,000 into that LETF, no matter what the market is doing. It's irrelevant what the market's doing because this is a long-term, multi-year strategy, and we have no sell rule at all. Each person makes a decision when they want to sell. That's when they're going to retire, they're going to put a down payment on a house, they got a kid through college, a once-in-a-lifetime vacation opportunity, whatever it is, you decide when you're going to sell. And I know several people in the Anchorage IBD meetup are actually doing this strategy. An alternate or a modified strategy that Eric came up for us, we call it the dollar cost average strategy version 2.0, and that is there's two buy rules. You're going to put in $1,000 a month no matter what. But on a down month, on a monthly chart, it's going to be a pink or a red bar. On a down month, you put another $1,000 in. So on the down months, you're with this placeholder value of $1,000. On a down month, you put in $2,000, and there's no sell rule. Each person decides when they want to sell. So this is a slide that Eric prepared back September of 22 when he introduced the strategy. And that is on a monthly chart, when you see a pink bar, where you see the black arrows here, every time you see a pink bar, you're either putting in double amount or a variation of that is 1.5 times. And he says, thanks to Hans for this idea of buying more on the down months. And this only works for a very long-term investor, I promise you. If you're going to need your money in 6 months, this isn't a strategy you would use. So let's look at the results. Starting back 6/30/22 is about the time I think I first introduced this. And if you started then, you would have been investing now for 28 months. And so if you were putting $1,000 in, I guess I should have asked, I'm assuming everyone's seeing the screen, right?
Yes.
Okay. Thank you. Should have asked that earlier. So TQQ, if you're following a basic strategy in $1,000 a month increments, and so some of your money's been tied up for 28 months, and on September 30th, your money's been only tied up for a few days. But after 28 months, your TQQ account is $58,730. That's a compound annual growth rate of about 60%. And if you follow version 2, where on the down months you put in the $2,000, $39,000 was invested, and it's grown to $86,532. And you see the numbers for SOXL. You notice on XOSL, you invested $1,000 more on version 2, so there was one more down month on SOXL. So what does this look like graphically? So for the TQQ dollar cost average strategy, The green line is version 2 and the orange line is the basic strategy. And notice there isn't, I'll take my cursor, notice there's not any really heavy drawdowns. There's a little bit of drawdown here and here, but it's pretty much a fairly steady upward sloping line. So for TQQ that doesn't have as much volatility as SOXL, there was never a period here where I'd say, wow, this was pretty scary. I wouldn't have been scared here. This went from 65,000 maybe down to 59,000 for 1 month. And then I might have been scared, but the next month I'm sitting at 70,000. Hey, I got over it. So this is a pretty interesting graph to me. And you'll see for SOXL, there's a little more volatility with the dotted red line is the one version 2, where sometimes you're putting in 2,000 a month, and the dotted blue line is a basic. And so this is a little interesting here. This got all the way up to 110,000 and then all the way down to 78. That's a pretty heavy duty. That's maybe 20 something percent or 30%. So that might get your attention. And so when I said there's no sell rules, if you're following a strategy like this, you could have a fail-safe rule and you could say, I'm going to put a trailing stop in and it's going to get me out. That's up to each individual person. And so I've combined all the graphs into one combined graph between TQQ and SOXL. So this is just an update of a strategy that we introduced about 2.5 years ago. And like I say, I know several people have told me that they're actually following this one. And one guy, every time he sees me, he has a pretty big smile and he says it's still working. I did receive feedback from one person that said that if we had like a COVID incident happen again, where some of these leveraged ETFs drop 60 or 70, 80% in a period of a few weeks, if that coincided with a time when you would plan to need the money, then that would be terrible. And that's why you may want to have a fail-safe on what you're doing here. And maybe a basic one is you would never let your account value go negative. Might be one rule, or you would never let the drawdown be more than X percent. So I just wanted to give an update here. Thought that would be interesting to someone, and I'll see if anyone has any questions about this dollar cost average strategy, either the original or the version 2. And you can just unmute yourself if you have a question.
I have a question, Floyd.
Yeah, George.
You have a period there of 2 years and 3 months. Have you done the back test since inception?
I only introduced the strategy about that time frame, so I have not gone back and looked at when each of these IPO'd, but I guarantee you, if we went back to the IPO date, the numbers would blow your mind on how much money, because when some of these split adjusted started trading, they were only trading at maybe 20 or 30 cents a share or whatever the number is. And so the numbers would shock you on how much money you would have made. But is that really answering your question, George?
Yeah, I'm just wanting to see a larger time frame out of curiosity, how many more drawdowns and how deep they would be.
So let me give you a homework assignment, George. It's really easy to download the closing prices for any of these ETFs. Really easy to find those numbers. You can make a spreadsheet, and you can go to the end of the month. And the easiest one to back test would, if you just do the simple strategy where I invest the same amount of dollars every month and not worry about up months and down months. And you could go back 10 years or back to the IPO date. And if you put $1,000 a month, every single month, that would be a really easy spreadsheet to make. And then you just add them up and see what you have when it's over. And you could look at the percent drawdown and et cetera. So I'll give you that as a little homework, George.
Okay. Also, for this 2-year period, do you have results if you did the strategy, the DCA strategy, but then you, like you said, you also implemented a sell rule for drawdown?
Good question. If I go here, if I had a sell rule where I had a drawdown of 30%, I never would have sold one time in this period. Now, let me do a quick calculation. That is 110,000 minus 78,201, and I divide that by 110. That's a 28.9% drawdown right here, this dotted red line. So if I had a 30% trailing stop, I never would have sold. If I had a 20% trailing stop, I would have sold up here somewhere, about in here. So it depends on how. My advice is, even on individual stocks or indexes or leverage, my advice is, if you want to use a trailing stop, unless you want to get stopped out, don't make that a low percentage number, or you'll put a trailing stop in, and then in a few weeks or a few months, you'll sell your position maybe just before it's ready to go higher. And so some stocks are more volatile than others. And so you need to look at the history of price variations to get a handle on what percent your trailing stop should be, for example. So am I connecting with you here, George?
Yes.
Okay.
And one final question. Have you ever considered buying a call option on these ETFs, or is that too much leveraged on something that's already leveraged?
Wonderful question, George. Either November or no later than December, I'm going to do a whole session, or I may have a guest speaker looking at long calls, short calls, call spreads, covered calls, bull puts, bull calls, what I meant to say, or bull puts. So there's several ways to trade options, and if you choose the right direction, you can make 100% profit in a month or two with not nearly as much money as if you bought the actual instrument itself. And so we are going to have a session on how to trade options, and I'm trading options on leverage ETFs right now.
Oh, okay. Thank you.
And there's a person, I don't know if he's on tonight. I apologize, I forget the name, but there's a person that emailed me, and he's fairly experienced, or I should say very experienced, and shared with me some of the strategy he used. And I asked him if he'd be willing to share that with us. And I think there's a chance he'll be our guest speaker in December. But the potential to make some really good profits on leverage ETFs with options is there, but you have to have very tight discipline, because if you guess the wrong direction, if you think you're going to make $5,000, you suddenly could be losing $5,000. And so you just have to be careful. But I think with a little bit of practice, understanding, and a little bit of discipline, I think a person could do well. So thanks for that question, George.
Thank you.
Anybody else before we move on? We got a guest speaker coming up. Anybody else? So anyway, I don't want to sound like I'm denigrating anybody, but this is like the lazy man's way to invest in leverage ETFs. But it needs to be a long-term strategy. It's not something where you're going to need the money in 6 months or even a year. And also, if you have confidence that the free enterprise system will continue to be successful, and if you have confidence that on a very long-term basis, 5 or 10 years from now, that the market would be higher than now. I can vividly remember the first time Dow Jones crossed 1,000. I can vividly remember the first time Dow Jones crossed 10,000. And what is it now? It's like 41,000. It wasn't that many years ago that it crossed 10,000, and then it crossed 20,000, and now the Dow's at 41, 42,000. And so if you feel that the long-term trend is up, dollar cost average is something to consider. If you're real nervous about market variability, and if your account value changes in a negative direction a little bit, then this strategy is probably not for you. Okay, I think that's enough for that one. And our next item on the list here is, Eric, you're going to be up. So I think
Okay.
I've lost my people's names. I got to find your name, Eric, so I can make you. Where is your name? I tried to get the names out of the way. I got to recover them. Just give me a second, Eric.
Well, do you want to just bring up the presentation from your side?
Actually, I could do that. Yeah. Let me just bring up the presentation.
It'd probably be easier.
Yeah, I'll do that.
There's only a few slides.
Let me see can you see your slides there, Eric?
No.
Yep. Let me go back. Let me try to share again. How about now?
Yep. It's perfect.
Let me go to slideshow, and then just tell me when you want me to advance, and we'll be there. So Eric is the guy I mentioned a little while ago that came up with version 2 on the dollar cost average strategy. And then more recently, he introduced to us, maybe about a year ago or so, a pretty amazing thing that he came up with called the Ultimate Leverage ETF All Weather Portfolio. Take it away, Eric.
Okay. You want to go ahead and advance? Yep. Yep. Go to the next slide. Okay. I don't know. It was about a year ago, Floyd, that I did give this presentation. So I know Floyd sent out the spreadsheet that lists out all of the presentations from the Alaska IBD meetup. So if you get a chance, I'd highly encourage you to go back, revisit that presentation. If you need any kind of primer on how we came up with that and all of the information related to it. So I'll try to just do a brief catch up here for you. So essentially what I was trying to figure out is how do I start with a 60-40 portfolio, stocks and bonds. Obviously this is not trading. This would be like a permanent portfolio that you would hold, but utilizing leveraged ETFs to try to maximize the gains, right? One of the things that I was trying to do with this is utilize a lot of non-correlated stocks and ETFs to diversify the portfolio. I went over all of that in the original presentation, so there's much more robust information found there. But essentially utilizing some crisis alpha to mitigate losses during market stress. And so what I did do is I went back, researched as far as possible. I show in that earlier presentation that I even went back into the 2008 financial crisis. What would this type of portfolio, how would it have performed with the S&P dropping roughly 50%? And it actually turned out quite well. And essentially, the portfolio should contain at least 5 non-correlated assets for maximum diversification and risk mitigation. And go ahead and go to the next slide. All right. So this was what the original Ultimate Left All-Weather portfolio consisted of. You can see we had a few of the 3X leveraged ETFs there, the UPRO Pure, which is the healthcare 3X ETF, and then TQQ. I did add some gold stocks in there, the gold royalty stocks, some Bitcoin, Ethereum, and then these last 4 stocks there, those are managed futures and market neutral ETFs, and those will essentially kick in when there's a downturn. So that's exactly what those are for, really. So they are just sitting there. They gain a little bit when the market goes up, not a whole lot. But then when the market turns down, that's when those things really kick in and they buffer any type of drop that happens within the market. Yeah, go ahead to the next slide. So that's a background. And what I did was I backtested this back to 2016, January. And if you had started in January 2016 with $10,000 and added $2,500 per month, your final balance would be $730,000. And the maximum drawdown was reduced to under 13%. So you can see here, it is that blue line. And I tried to compare this to like a TQQ buy and hold versus a UPRO buy and hold. And you can see it's like you roughly end up in about the same place. You can see the TQQ actually goes above the blue line for a while there from obviously COVID lows and then up to the top in 2022. And then, yeah, right there, it was October 2023 was when I gave the presentation. And you can see that TQQ buy and hold was roughly the same spot as the portfolio that I introduced. But obviously, you didn't have to deal with the 79, 80% drawdowns of TQQ. So it was much easier to sleep at night. And you essentially made about the exact same amount of money. Okay, go to the next slide. Okay, so this is essentially the update. We left off, obviously, October 2023. So this is how it performed. So from October 2023 all the way through the end of September, I had sent an email to Floyd about this, and Floyd asked me to present this to the group just to catch everyone up. Like, how did this perform? So essentially, if you had seen the presentation back in October, you decided, hey, this sounds like something I'd like to do, and you put $10,000 in, rebalanced it quarterly, no trading, you just simply bought the ETFs that were consisting of the Ultimate Left All-Weather portfolio, this is what you would have ended up with, a 47%, almost 48% return. and the drawdown was 3.89%. Very easy sleeping, no stomach pains with any types of crazy drawdowns. So this was a pretty easy ride for the past year. And you can see over to the right how those leveraged ETFs performed the managed futures, market neutral, gold, and coin. So the leveraged ETFs, they gained about $1,877. As I mentioned, the managed futures, market neutral, those are just buffers, so they didn't really gain a whole lot. And then gold, 552, and the Bitcoin and crypto there, the Ethereum, those were actually the largest performers over the past year at over $2,300. And go ahead and go to the next slide, Floyd. Okay. So after a year of doing this, I just have a few proposed changes that I would make to this. So the first one is there's been a few changes on the coin cryptocurrency side. As you're probably aware, there's the new Bitcoin ETFs, and there's also the new Ethereum ETFs. One of the benefits of the new Ethereum ETFs is they have a much lower expense ratio. So you can see the ETHE, which I had originally recommended, was really the only thing that existed at the time. It was a 2.5% expense ratio. And you can see the new ETHA, which is the iShares Ethereum Trust, is about a tenth of that at 0.25%. So that would be one of the main changes that I would make, is just adding that in place of the ETHE, just to lower that expense ratio a little bit. Another thing is I did get some feedback. Actually, it's funny because I received quite a bit of email from folks asking additional questions and recommending a few things. One of the pieces that I think folks were a little bit hesitant about was just putting so much money or so much percentage in individual ETFs, those related to the gold royalty. So one of the changes that I would say is probably a good proposed change is just allocating less to those gold royalty stocks and just adding in the GLD at 7%. And that would help to mitigate some of that single stock risk that's there. And then also adding in the GLD, it does add an additional it's not non-correlated, but it's somewhat uncorrelated. You can see the GLD over on the far right there. I did some correlation with the GLD, with the WPM, RGOD, FNV, OR. Those are the royalty stocks. You can see some of those are under that 50% correlation, which is that sweet spot that I like to see to help me understand that those are somewhat uncorrelated, that you'd at least get some benefit from having that in there. And then the last thing is just changing the managed futures market neutral to be more balanced. So when I originally created this, the CTA was pretty new. That was a new ETF. It had just come out. And now that we've got another year of history, probably makes sense to just go ahead and just even those out, balance them so that they're not so heavily weighted toward the KMLM and DBMF up there at the top there. So those were the changes. And then if you go to the next slide, I kind of show exactly what that would have looked like. So on the right there, you can see I've got the original Ultimate Left all-weather portfolio at that 47.89%, and then the 2.0 portfolio that adds in the changes mentioned in the previous slide. It actually brings your year return from October to September almost up to 50%, and the drawdown is actually much less, a little bit less at about 3.5%. So it does make a pretty big difference there, just evening those things out and eliminating some of the single stock risk on the gold. And yeah, you can also see the expenses are 0.45%. So it's pretty good. And then the dividend yield is about a little over 2.5%. And go ahead and go to the next slide. I mentioned this in the original presentation that I personally use M1 Finance for this. It's so easy to manage this, and M1, it's a brokerage that you essentially just put in the percentages that you want to allocate to various ETFs or individual stocks. And then as you DCA into those. Let's say you add every month $250 or $500 or whatever it is, right? It will allocate those smartly so that it maintains your percentages. So I really do like the way M1 works with this all-weather portfolio. And I did leave a link there. I don't make any money from this or get any kickback at all. This is really just if you wanted to invest in it, you can just click on that pie and then it'll present it for you. You can add it into your own account.
Eric,
Yeah.
Floyd,
Yeah.
do you know, does M1 have any portfolios that either people like you have developed or they have developed where you could look at performance to see if anyone's developed another strategy that looks good too? Or is this just, it's just that if someone opens an account, you have to set up your own strategy? How does that work?
Yeah, it's a good question. They do offer some strategies that they have as a company that they have put out. Some of them follow Warren Buffett or other high profile guru investors. They do offer like the targeted type portfolios. If you are someone that has 20 years from retirement, maybe it'd be a little more aggressive versus someone that's like within 5 years of retirement, maybe a little more conservative. But in terms of like a user community, I haven't seen that. Now, what I have seen though, Floyd, is they do have a big following among folks that they're out in the investing community. Like they may have their own websites or presenting things perhaps on YouTube. And I have seen where they'll, say, hey, here's my recommended portfolio or whatever that may be. I don't see a whole lot of people that have recommended these all-weather portfolios, and certainly they're not adding UPRO and TQQ and into their portfolio. Most of them, if they do have a portfolio, they're putting in Vanguard funds and those types of things.
Okay, hey, but thanks. I appreciate you with me because I honestly didn't know the answer.
No problem.
Anybody?
Yeah. Any questions?
Eric, this is Watson. Wow. All I can say is wow. My God, I had not seen your earlier presentation. This is just fantastic what you have. All the circus and the drama that a typical CAN-SNIM investor has to do versus something like this or the other LETF strategy, man.
I agree. And in fact, I bring that up in the original presentation is that one of the things that I struggled with is just the amount of time that I would have to spend on the weekend running screens, searching for stocks, and then, oh, this doesn't work out. And now I have a stop loss. And it was frustrating for me. So I was trying there's got to be a better way, something easier. And it's actually, I would recommend the book by Tom Basso called The All-Weather Trader. I mentioned that book in the original presentation, but Tom is on a lot of the CanSlim presentations. I think he was on one of the IBD yearly webinars that they had. They brought in Tom and he talked about some of the all-weather portfolios. But yeah, his book was a life changer. So I would highly recommend to read that book and maybe you'll get some ideas for your own all-weather portfolio.
Thank you. Yeah, thanks to you and certainly Floyd and Gary and all my God. This is unbelievable. Thank you.
You're welcome.
Yeah, thanks for that comment. I appreciate it, Watson. That's why we have speakers like Eric and others that come in and share their experiences and things they have learned. And the whole goal of the Anchorage IBD meetup is to share ideas liberally and help people see what different strategies are and gain some confidence in what they want to trade in and why it's important to follow rules and et cetera. And we're all just learning from each other, and hopefully it's always in an upward trajectory where we look back how we were trading even just 2 or 3 years ago compared to how we're trading now, and we can just smile and say, I'm doing better. I'm doing better. That's the goal.
I agree, Floyd.
You got another slide?
No, I think that's it. I did have one thing to add. It's actually in addition to what Gary was talking about earlier. I've been doing a lot. I know some folks have been asking about this in some previous calls. I've been doing a lot of back testing on the 2X ETFs. As many of you are aware, the QLD, SSO, those go back much further been the 3X ETFs, right? So I'm someone that I like to have a more robust back test if possible. And that's why when I was trying to work on this all-weather portfolio, I even went back into the great financial crisis and trying to figure out, like, how would this portfolio have actually worked back then, right? So I did want to just, I guess, put this out there that some of the back testing that I've done on the QLD and some other of the 2X ETFs, I've actually been able to back test all the way to 2006 in going through the financial crisis and all the way to present day. And I'm pretty pleased with the results so far. So if you're a conservative investor, someone looking for a more robust back testing on something that's a little more tame, like a 2X ETF, but could still give you roughly 40% compound annual growth rate, I'll be sending those over to Gary and Rick and Floyd. And hopefully next month, they'll be able to highlight those back tests. So I just wanted to throw that out there.
That's really cool, Eric. I appreciate you sharing that with us. Maybe you told me, I don't think I remember that you were able to go back that far. And so from going back that far, did you have any aha moment or anything that caused you to smile and say, I think I'm getting this figured out?
I think the big thing, Floyd, is just the amount of confidence that it gave me, especially on the QLD, being able to back test. And the thing is, like, a lot of these back tests, if you look at them, were starting in 2012, 2013. That's the beginning of a giant bull market, right? All the way to, if you count 2020, COVID, or even if you go beyond that, 2022, right? We're talking a long time. So to be able to start the back test right before a giant plunge of 50% in the S&P, it starts to give you a lot of confidence, like, wow, this really does work. And it can work even when the market has a huge drop and you're still fine. And to have a relatively mild drawdown and still maintain a 40% compound annual growth rate, I think it, just for me personally, that gives me a lot of confidence that that particular strategy, I can put a little bit more cash into it because I have that long of a back test to go. And we're talking 18 years, right?
Yeah.
2006. It's a long time.
Eric, you've said some very profound things there that I don't even know if you realize, but I think everyone listening to us is there's no easy, quick fix out there that the market, whenever I thought I've had the market figured out, I found out real quickly I didn't. And if you don't do the homework, do the back testing, look at what happens in downtrends. Sometimes market goes sideways and it's choppy for a period of time. And if you haven't studied that and looked at how accounts can be affected, and if you can do some back testing, the one thing Eric said that really resonated with me is when you do the homework and you look at different market trends, and if you really study this, to me, one of the most important things he said is you gain confidence. You gain confidence in the strategy you're choosing, and you understand how the strategy works. You understand how you need to react in different markets. But if you have confidence, to me, what that means is more confidence you have, the less emotion you have. And if you have more confidence and less emotion, you're making smarter decisions, because me included, all of us have had times when we needed to make a decision and we got emotional about it, and it wasn't the best decision we made. At least we made the decision, and some people just freeze up. But do the homework and challenge. If you think that our leveraged ETF stochastic strategy has got some faults to it or is not the right way to go, then come up with something better. Don't just throw darts. You say, okay, I think I can do better. And man, I tell you, if you come up with something better and you share it with us, I'll give you 100% credit. And my advice, or my appeal would be, if you come up with something better that is really cool, don't keep it to yourself. Share it with us and let us reap the benefit of your work. And we'll try hard as we can to share back equally. Okay. Anything else, Eric?
No, I think that's it.
Okay.
And if you go to the next slide, Floyd, I think it has my,
Oh, there it is.
So there's my email. If you'd like to get a hold of me, it's the LETF DCA investor at gmail.com. Send me an email if you have any questions or comments. Thank you.
Fantastic. Fantastic.
Would you be including this presentation material in your when you give us the slides, Floyd?
I'm going to be sharing all the slides. When I send out the recording, I'll send out the slides for each of the presentations we did tonight.
Thank you, sir.
And I probably would do that probably no later than noon Saturday, and I'll try to do it even earlier than that. Okay, one thing I thought I would share, we have just a little bit of time, is, let's see, I thought I had Market Surge loaded up here. Let's see. Okay, Market Surge? No? Did I hear yes or no?
No.
Okay, no. Okay, thank you. Let's just do that. The challenge is that this system is asking me to be smarter than Zoom, and I don't think that's possible, but we'll try one more time. Let's see, I don't see where I have Market Surge. Oh, here we go. Now can you see it?
No.
Oh, Floyd. Let's get it together here. Okay. Oh, wait a minute. I think I know what I need to do. Let's go back to share screen, and let's go like this, and let's go like this.
Yes.
Now you got it?
Yes.
So one thing, here's TQQ, for example, and this is Market Surge, but you can do this with other programs, but it's also, this gives you one view, like over here's a double bottom shown out by pattern recognition, and here's like a flat base that's sort of spread out. But if you go to the weekly view, you'll notice how the action and performance looks so much different. And let me hide this data box. Let's get rid of that. But here, look at this COVID crisis right here in the 20s. Look how steep that is. But even scarier than that is this long downward drift over here in 2022. So that gives you perspective. And if you want even longer term, it looks like there's some bad data here. But if you go to the monthly, the nice thing about going to the monthly, and this gets back to what George was asking, if we've gone back further, this is for TQQ. Basically, it's just been on this almost a 45-degree upward angle ever since the IPO. And if you go to a monthly on SOXL, probably about the same, you see SOXL is a little more volatile. But still, so that's not a 45-degree, that's probably a 30-degree, or you can maybe draw it like this or so. But if you'll notice, if you just maybe even start with the monthly to get an overall sense, and you can do this for individual securities also. Here's a weekly. So you can, when you look at the weekly, you can say, wow, man, no wonder I didn't do so good in 2022. And then you had these big down bars, 719, and here's 726, and over here is like 802. So we had 3 serious drawdown weeks here very recently in SOXL. So we've got this interesting formation where we've got a convergence here. And I promise you, this wedge that I've drawn, I promise you that in a few months from now, that SOXL will either break out to the upside or break out to the downside. How profound is that, guys? And then if you come over here, and then if you're really getting ready to trade something, if you want to get a little more granular, you can come over here and look at the daily. And the daily's pretty interesting, but it does seem like we've got some kind of a base over here. And we don't know if SOXL is going to pop back above this recent 40.51 or not, but it just gives you an indication. And one thing that I've noticed is when you go to option tables, the premiums on SOXL are significantly higher than they are on TQQ. And it's solely because there's so much more volatility here. So let's look at FAS. That's the financial triple. And look how much different the daily is. But if we come over here to weekly, you don't see some of the same challenges that we've seen on these, but yet this is the COVID thing here. And here's a little bit of 2022, 2023, but you can just draw these long-term trends to see there's something to learn there. So I don't do this every day, but especially on the weekend, I like to go back and look and see what it's telling me here. Or if I'm trading TQQ, let's go back to TQQ. One thing that is very instructive to me is I can see what TQQ is doing, or we can go to the monthly if you want, but let's go back and look at the NASDAQ. It's not the triple. And do I learn anything from looking from the base index to help me understand the action that is going on the triple? So I'm just giving you a little exercise on how to use market surge or other graphs and get a sense on, I call it the personality. You can see that I think these are bad data points. I'm not sure what these spikes are here. I don't remember seeing that recently, but if I go to the weekly, those spikes won't be there. But if you look at the weekly, you can see that there's a fairly steady downtrend here. So it'd be pretty easy to go to cash and then wait for a buy signal. And you can see you got a fairly decent uptrend here, where it's in my mind, this looks somewhat orderly. Long down trend, long uptrend. I don't see that orderliness. That's the right word. I don't see that when I go to SOXL. It's not so simple. The downtrend may be quite so simple. It may be similar. Let's see if I can. That may be somewhat similar, but then I've got all this chop over here that is a little more unsettling compared to TQQ. I'm not saying I like one over the other. There's reason to trade both, but I guess if you look at some individual stocks, some of those are fairly calm and steady. I heard the other day, maybe a few months ago, I heard about this company called FTAI Aviation. And let's look at a weekly. I don't know if many of you have heard of FTAI Aviation or not, but if we go to this comparison window and we put in NVIDIA, and let's see, how come I was going to try to expand this guy, but oh, here we go. So look, this is for 1 year. This crazy aviation company, look how much better it's done than NVIDIA. Let's look at 2 years. NVIDIA's done better. Let's look at 3 years. 3 years, look how much better. TI8, it's gone up 311%, and NVIDIA is up 194. And many of you on the call maybe haven't even heard of this company. And its volatility is here. Look here, after this, what is this, 3 years? They're almost dead heat even. And both of them, how'd you like to be up 500 and something percent here? So let's go back to about, maybe let's make this about 17. I'm not even sure. So if you go back to 17, NVIDIA did this huge upturn here when things took off. But in terms of more recently, though, I was just surprised when I was doing some work here that this company that I knew almost nothing about was almost as a good an investment as NVIDIA, and with substantially less volatility. So I'm just sharing, if you have a good program like Market Surge or other, you can go in and you can, if you hear about a company, you can go in and look at it. This comparison window is really very powerful.
I have a question.
Quick question, Floyd. How did this company name come into your screen or consciousness?
I believe when I went to the O'Neill screen, maybe people don't know what I'm talking about when I say it popped up, and I started looking at it and doing some studying. So let me show you how you find, if you're using Market Surge, if you pull this panel over, there are all these pre-built strategies, Bill O'Neill, Warren Buffett, Benjamin Graham, Peter Lynch, etc. So every Saturday I pull up the Bill O'Neill screen. And let me show you how you do that. You double click on the Bill O'Neill screen, and then you pull up this slider bar, and I just scroll to the top. I go from number 1 on down. It's just alphabetical, nothing magic about it. So if you pull up the Bill O'Neill screen, the first, whoops, I'm still stuck on FTI Aviation. You have to double click on it. I have just found all kinds of cool companies with this screen. So the first company is Arch Capital Group, and I like to have the data box available. And I noticed that they're predicting to 25. There's a negative number here, and so I pass. It's almost like when you're on a dating swipe and you just pass and say next one. Back. Here the next one is Aiden ADR, the Netherlands company. And it doesn't have a huge amount of a volume, but it's a company I never heard of. But right now, the O'Neill screen has 84 stocks. And so every Saturday, I'll go through all 84 stocks. And out of going through 84 stocks, I normally find 6 to 10 stocks that I want to study more and find out more about. Here's a company, Argan, provides engineering, construction, in the telecommunications business. 2025, the profits are 79% higher than 2024, and they're going to be another 26% in 2019. I'm going, look at that. I may want to know more about what's going on with a company like that. And so you can just scroll through all 84 of these. And once you get used to doing this, you can go through all 84 in maybe, I don't know, 30 minutes or so. But look at this one. This is one I've heard on IBD Live quite a bit. App 11 develops mobile app ecosystems by helping app developers to market, monetize, analyze, and publish their apps. And something happened back in September. It goes from 80 something dollars to $145. That's like a 50% gain in a couple of months. Wowee. So this is just called the Bill O'Neill screen. And so I just go through, I'm just hitting the space bar. And when I go through the space bar, I'll look. And when I find something that gets my interest, I make a note of that and study it more. And I think I told you guys in a recent message, I found a really cool stock using this screen. If you guys remember that I did that, and it's a Blue Owl Capital. I found this from the O'Neill screen, and notice it provides wealth and investment management services. And in 2024, profits up 20, predicting next year up 24%, pays a dividend. I don't ever buy a stock because of a dividend, but look at this, it's about a 4% dividend. And I think I got in over here at about 1650, and here it is at 2095. And if you look at the profits, 2025, they're estimating they're going to make $1 a share, 97 cents. And the PE range is 24 to 30. And if that PE range doesn't change and they make $1 a share in 2025, that's suggesting the stock price will be between 24 and 30. If it goes to 30, that's almost a 50% gain from where it is today. So you can find some companies by using screens like that. And if you guys are using Market Surge, the screen rectangle here called Open Stock Ideas, notice there's a weekly review. One of the weekly reviews is this Bill O'Neill screen. Weekly report of stocks approaching new highs, 389 stocks. Market Surge Growth 250, there's 300 stocks. And so you can, whatever charting program you have and tools you have, or if you just read the newspaper, the IBD newspaper, there's the Big Cap 20, there's the IBD 50 sector leaders. You can find some life-changing stocks if you go through and just do the homework. So I'm going to stop talking and see if we have any questions before we sign off for today. And we are recording the session, and I'll get that out and I'll get the slides out. But what do we have for questions?
Hey, Floyd.
Yeah.
Look at CEG and NRG. They're utilities, and I don't know how far back. Put them on your comparison chart. Because I was one of those two video.
Can you tell me the symbol phonetically? Because NRD is not a symbol.
And what is it? Hold on. NRG is not. Hold on. Let me pull up my.
Yeah. NRG. That is one. Yes, NRG is.
Okay, and then CEG.
Okay, so let's do the comparison window.
Yeah.
We'll do CEG.
With NVIDIA and your F.
NVIDIA. Okay. NVDA. And FTAI. So let me pull this window out a little bit and let's look at 4 years.
Yeah, they've only sprouted up here recent, so it probably doesn't look as good for long term.
So over here you can see the percent gain. So between NRG and CEG is way above. See this right here?
Yeah.
They're not doing as good as NVIDIA and FTAI, but they're still not doing shabby. Constellation Energy since 10/9/20 is up 482%.
Yeah.
Now, I don't know.
Shorter term, like a year or two, I think it makes a big difference.
Here's a 2-year window. And Constellation's up 210 and NRG's up 113. And then you can see NVIDIA and FTI up here. If I go to a 1-year window, FTIA is a clear winner, but you can see between Constellation Energy and NRG, they're very close to each other.
Yeah.
So that's a good way to use that comparison window. And let's look at, I don't even know what the answer is going to be, but let's look at used to be a big name company, but let's just throw GE in here and let's put in GEV and see if we go back. I think although those are relatively new companies, so going back may not help us.
Because
Look at that CEG. How come it's up 482%? Did they buy a company out or what happened there? Look at that.
change in management and what they're doing. That's an old utility too.
CEG
Constellation Energy.
provides power, natural gas, renewable energy products and services in the U.S. and well, pays a puny little dividend. I mean, look at this. In October of 23, it was $102 stock, and here is a $262 stock. Okay, so that's what you can do by going through like on the weekend and looking for companies that are growing and have the potential to continue to grow. That's what we're looking for.
Yes.
Okay, anybody else have anything else before we sign off?
One quick thing, I think CEG was the owner of 3 Mile Island, and they're looking at reopening it to provide power for some of the AI.
Well, I think it's more specifically, I think it's Microsoft that's asked them to reopen 3 Mile. Do I have that right?
Yeah, you may be.
Yeah, I think it's Microsoft that is doing that. And I just wonder about the people who live that area. Do they think that's a good idea or not? Okay, do you know anything about that, Eric?
About Microsoft?
3 Mile Island.
Yeah, I think you're right. I think that's what I saw in the article.
But the people that live in the Midwest, do they think that's a good idea or a bad idea?
It's in central Pennsylvania.
Yeah. Eric doesn't live too far from central Pennsylvania. Well, we don't talk politics on this show. Anything else anybody would like to talk about before we sign off for tonight? I really appreciate the questions and participation in our polls and the questions people have had, but we'll leave another minute here in case someone has a question for us.
Thank you very much.
Was there a question?
Do you know when FTAI showed up on the O'Neill screen?
My recollection is maybe 2 years ago.
Because from March 2023, it's had a beautiful tight action just straight up.
Let's see. March of 23, you said? Over here, March.
The other screen that you first had of FTAI.
Yeah, but I'm just looking at a daily. Here is, right here is March of 23. But back here is a $16 stock, and over here is a $32 fund. There's a 100% gain right there. We go to the weekly. So but I like this new feature they added, Market Surge. This is the quarterly profits. So something terrible happened here where it just fell apart. Now the stock didn't drop as much as this profit drop shows. I don't know what happened right here. And look at these red bars, or huge red bars. I think Bill O'Neill has a one seminar and he called these icebergs. And but then the profit recovery has been stellar. But then what happened right here? Boom, fell off recently. So anyway, there's even good stocks will have time when they go down, and you just have to figure out how you're going to trade those and have your rules.
But on those profits on the green line, I thought I heard somewhere that they make adjustments to that at times. That you can follow the trend, but the numbers don't always match up with the chart. You know what I'm saying?
Yeah, I understand. Yeah, I understand that. But if you look over here at this data box,
Yeah.
you can see the earnings per share. Look at this one in 2020, it went from $1.47 to a negative 104, and in 2022 a negative 139, and they're estimating in 2024 minus 30 cents. And so there is.
Yeah, it's there, but and I use it as a guide. But like you said, go back to the data.
These green lines, they may just be a relative thing and not associated with any particular number, maybe.
But you can see the earnings per share on the chart even below.
Yeah. Yeah, this is annual and this is quarterly down here. Okay, thanks everyone for coming in tonight. I think at one point I saw we had 35 with us, and I don't know how many people watched the recording, but onwards and upwards. If you remember on the agenda, I mentioned if there's anyone out there that has any interest at all, maybe tag teaming with me for 5 or 6 months with the idea that at the end of that period, you would take over the Anchorage IBD group. If someone would like to know more about that, drop me a email and we can do a Zoom meeting or a chat. I'm at tqqqinvestor@gmail.com, and everyone have a great evening. Thank you. We're going to sign off.